Today, we're looking at something, well, pretty strange, actually. Despite all the recent heightened tensions between Israel and Iran, oil prices have barely reacted. We're talking less than 10%.
It really is striking, isn't it? Because historically, I mean, you just have to think back 20, 30, even 60 years.
Yeah.
Any hint of conflict involving Israel, or especially Iran,
Yeah.
would send global oil markets absolutely spiraling. Prices would skyrocket.
Would feel it at the pump almost immediately.
Exactly. So this calm, it's more than just unusual. It feels like a fundamental shift. And that's really our mission today, to dig into what's really going on behind the scenes here. Why the calm this time?
Okay, let's unpack that.
Yeah.
Why are oil markets so sort of unfazed now when, like you said, historically even a whisper of trouble in the Persian Gulf used to cause a global energy panic? What's changed?
Well, the really fascinating thing is this huge shift over the last couple of decades, and it comes down primarily to the U.S. shale revolution.
Ah, shale. Okay.
The United States, which for decades was the world's biggest importer of crude oil.
Right, the biggest buyer.
The biggest buyer, exactly, has totally flipped the script. Now it's the second largest exporter, right behind Saudi Arabia.
That's incredible. And that's all down to shale technology.
Pretty much. That technology has unlocked massive reserves, pouring somewhere between an extra 10 to 15 million barrels of crude oil onto the global market.
Yeah.
Every single day.
Wow. 10 to 15 million barrels extra.
Yeah.
So what does that actually mean for the bigger picture? Does it mean the Middle East just doesn't have that same chokehold on prices anymore?
Well, connecting the dots, that's basically it. The Middle East doesn't hold the same, let's say, overwhelming sway it once did over global oil prices.
Okay.
Think about it. Even if you had a sharp cutoff of, say, 2 or 3 million barrels a day from the Persian Gulf, which is still a lot, the U.S. and other producers could largely step in and fill that gap. Now, there might be some teething pains, you could call them.
Teething pain. Like what?
Yeah. Like refineries needing to adjust. Different types of crude oil need different processing setups, right? So switching sources isn't instant. There might be temporary operational hiccups.
I see.
But overall, the global market has this huge new cushion. It just fundamentally changes the math. It gives us a stability we really haven't seen before when it comes to Middle East supply shocks.
Okay, that makes sense for maybe smaller disruptions, but what about the really extreme scenarios? The things people worry about. What if Iran actually tried to disrupt things massively, like closing the Strait of Hormuz, those vital shipping lanes, or even worse, a military invasion of its oil-rich neighbors?
Right, that's the big question, isn't it? And it's a valid concern. Let's take the Strait of Hormuz first.
Yeah.
Even if Iran wanted to shut it down, and they certainly make threats,
Yeah, we hear the rhetoric.
it's very unlikely they could actually do it for any sustained period. Their naval capabilities, well, they're quite limited.
Oh.
It's mostly small, fast attack boats, not really a proper blue water navy that could enforce a blockade against, international naval forces who want to keep it open.
Right.
Plus, think about the diplomatic fallout. Doing something like that would instantly isolate them. Even crucial customers, like China, would be alienated. They'd be pretty much on their own, maybe, except for Russia. The economic and political price tag would just be enormous for them.
Okay, so closing the strait, probably not feasible or sustainable for Iran. But what about that other scenario, the ground invasion? Going into Iraq or Kuwait, or maybe even trying to reach the big Saudi oil fields in the east. That sounds like it would cause a massive shock.
Oh, absolutely. That scenario would grab everyone's attention. No doubt. Taking Iraq and Kuwait's fields offline, you're talking maybe 5 to 6 million barrels a day right there.
Yeah.
In Saudi Arabia's eastern fields.
Yeah.
That's where most of their production is. That region also has a significant Shia population, which some worry could be, susceptible to Iranian influence. Add that potential disruption, maybe another 10 million barrels. Yeah, numbers get very large very quickly.
Okay, so that does sound alarming. Yet, as we said at the start, the market and the experts don't seem overly panicked, even by that possibility. What's the thinking there? Why the relative calm?
It boils down really to a cold, hard calculation. Risk versus actual capability. And also Iran's own internal situation.
Okay.
Look at recent events like the Israeli retaliatory strikes. They seem to show that Iran's air defenses are, well, not very effective. Meaningful air defense seems to be lacking.
Right.
So now imagine trying to march a huge infantry force, maybe 50,000, maybe up to 200,000 soldiers, mostly on foot, not heavily mechanized, 500 miles across open desert, with little to no air cover. Against any modern air force, they'd basically be easy pickings, as the saying goes. It's just not a realistic military proposition.
So the capability just isn't there for that kind of offensive operation.
It doesn't seem to be. And there's another layer, Iran's military structure itself. It seems designed more for internal security, for controlling its own diverse population. Remember, only about half are ethnically Persian, rather than for large-scale external expeditionary warfare.
Interesting point. Internal focus versus external.
Exactly. And think about the political risk for the regime itself. Launching a massive invasion like that and having it fail spectacularly, which seems likely given the military realities with huge casualties, that could very well be the end of the current Iranian government. The internal consequences of such a gamble are immense.
So the risk to their own power is just too great.
Precisely. When you weigh the low probability of success against the catastrophic risk of failure, it just doesn't look like a viable or even rational strategy for them to pursue.
Okay, so wrapping this up then, what does this really mean for you, our listener, when you see these headlines about tension in the Middle East?
Well, it means the relative calm you're seeing in oil prices isn't because the threats aren't real or the situation isn't serious. It is. But it reflects this fundamental shift in global energy dynamics, largely thanks to U.S. shale.
Right, that new cushion.
That cushion, yeah. And it also reflects a pretty sober, realistic assessment by the markets and experts of Iran's actual military capabilities versus its rhetoric and the huge internal risks any major aggression would pose to Iran itself.
So the game has changed.
The game has definitely changed, and, knowledge is always most valuable when you think about how to apply it. So maybe here's something to consider. How might this newfound resilience in global energy, this decoupling from Middle East volatility, driven by the U.S. shale boom, how might that subtly change diplomatic calculations and international relations in the years and decades ahead? It's likely to have impacts far beyond just the price you pay for a barrel of oil.